pero para hablar del dato del día. Dato de paro. ¿Cómo se ha visto allí precisamente en la gran potencia del mundo, en Estados Unidos? Se lo vamos a preguntar a Jay Pelosky, founder of TPW Advisory. Jay, thank you so much as always. Good afternoon. Good morning for you.
Thank you. Good afternoon.
Jay, jobs data today is especially strong, but the market is up, something that most people wouldn't actually understand. Is the market in some kind of delirium because inflation and jobs data actually suggest that the Fed should not cut rates in June, which is something that the market is already pricing in?
Oh, I love that term, delirium. I think it's a little bit of a catch up from yesterday, right, when stocks sold off over 1% because of some news out of the Middle East. So I think it's just kind of a catch-up day, so you're basically flat over the 2 days. But I think the more important thing is what you touched on, namely that interest rates have backed up considerably this week, but yet stocks have done fine. And even more interesting, the dollar has been weaker. So that suggests to us two things. One, that as we've been arguing, the Fed and interest rate cuts are no longer the main focus. The main focus of the market is growth and earnings growth. And if the dollar starts to weaken, for the second important point, that should further encourage investors to go into things like commodities and non-US markets. And commodities have been on a tear very strongly over the last couple of weeks. And it's not just oil, it's not just gold, it's also copper. And so we believe that commodities are correctly pointing out that we are at the beginning of a global growth upcycle. And thus stocks are correct to not be worrying about a stronger economy, which may reduce the number of Fed rate cuts. Fed rate cuts are now insurance. They're not gas for the engine.
Jay, do you think that the Federal Reserve should actually cut rates this year? Because yesterday, Neil Kashkari was saying that maybe we shouldn't actually think about cutting rates this year because inflation is too sticky.
Yeah, just as we were just discussing, the most important point is that the markets and the central banks are now in sync with what they expect to see happen, right? Remember, at the beginning of the year, the market was pricing 6 rate cuts, the US market, and the Fed was at 3 rate cuts. Now both the markets and the Fed are at 3, and maybe it's 2. We'll see how it plays. But importantly, that kind of convergence happened with no downside to risk markets, which suggests, an increasingly strong view that the economy is going to be fine, and the economy is really the story that we want to pay attention to. As I said, rate cuts are much less important to focus on. The real focus for investors now should be on ascertaining the strength of the global economy, the likelihood that we're early cycle, not late, focusing on things like PMIs picking up in Asia, focusing on things of that nature, like a weak dollar, like what are commodities telling us. Focusing on the Fed is going to lead investors to miss the big opportunities which are manifesting themselves in the markets right now.
Jay, by the way, before saying goodbye, you're in New York, right?
Yes.
I have to ask you, how is everything there after the earthquake? Is everything okay?
Yes, I've been very busy focusing on trying to get my monthly that I write out today. And so, to be honest, I didn't even notice anything. I'm right in the middle of Manhattan on Madison Avenue and in the 30s. So everything seems fine. We just wish the weather would be a little bit warmer because it's been unseasonably cold. But thankfully, thanks for your question. Everyone seems fine as far as I know. And, here's to a relaxing spring weekend.
Jay, founder of TPW Advisory, thank you so much for your time once again here in Negocios Televisión. Have a good day.
Thank you, you too. Always a pleasure.
Bueno, pues nos decía Jay que de momento ahí en Nueva York todo correcto. Bueno, vamos a ver.